Crypto markets bouncing around this week with Bitcoin back above $40,000 after yesterday's weakness.
The real game here is whether or not it is going to be adopted as an institutional asset. And I don't see anything that has changed my mind on that.
And we finally decided Bitcoin was the strongest treasury asset that we could find. I think in the last 12 months, we saw an acceleration of digital transformation in two obvious areas. One is the digital transformation of sales, marketing, and services via zooming around and dematerialization of meetings. And we basically converted $50 million worth of sales and marketing effort into streaming video and Zoom meetings. And so the velocity and the efficiency with which companies market, sell, service their products has dramatically increased. And the second digital transformation is the digital transformation of assets. And that's what Bitcoin's all about. It's like we know what happens when you transform photos or music or videos or books to digital form, and they move faster. But I don't think anybody was ready for the idea of transforming gold and silver and bonds and stocks and money to digital form, because that is just a profound thing that's impacting every company on earth, every person on earth, and it's going faster than any previous digital transformation we've seen. If you'd asked any company in February of 2020, do you have a Bitcoin strategy? They would be like, what's Bitcoin? Why do I need it? What's the problem with my traditional treasury strategy? But I think if you look at what happened following that, all the treasury strategies just were broken. If you're buying low yielding bonds, you're getting 0% interest. The money supply is expanding. It expanded 30% last I checked, but certainly 20%. So your purchasing power is falling by 20%. So that breaks people out of their traditional patterns. So the idea behind Bitcoin, and if you reason from first principles, and Elon Musk does reason from first principles, he created PayPal, and he created a rocket company nobody thought you could create, and he created a car nobody thought you could create. Well, then you look and you say, well, look, I got $20-30 billion and it's losing 15 to 20% of its purchasing power a year. What should I do about that? The answer is pretty clear. Buy an appreciating asset. MicroStrategy went through the process of considering everything, and we finally decided Bitcoin was the strongest treasury asset that we could find. My message to him, and it would be the same message to anybody, Facebook, Google, Apple, Amazon, is if you have $100 billion worth of cash or $10 billion worth of cash, it's yielding zero, losing 20% of its value a year. It's a liability. Flip it to an asset. The way you flip it to an asset is you convert it into something which is going up 200% a year. And Bitcoin's going up 200% a year for a decade, but it went up 800% last year. And if you understand Bitcoin, you think, well, it's $1 trillion asset, probably going to 100 trillion. So if I get in now and I convert my cash, which is depreciating, into something that's appreciating, you create a very positive cycle for your shareholders. And that's what I conveyed in the tweet. I mean, that's what he was doing. My only disagreement with him is I told him to buy 10 billion and then, 5 billion. If you look at what happened, if Tesla or Apple stepped up and bought 10 billion worth of Bitcoin, they would triple it, double or triple it.
Yeah.
You would, people noted Tesla made more money in 6 weeks following that decision than they made in the history of making cars. In February of 2020, Bitcoin was a consumer thing. It was for crypto traders and consumers, and there were some hodler believers, but at that point, the cost of capital felt like more like 7%, and conventional treasury strategies you thought would yield 3%. And you might hold your nose and accept a minus 4% a year thing because, it'll be 20 years before it's really material. That's fine. But when the cost of capital went to 21%, the treasury yield went to 0%, and you got minus 21%, then every institutional investor says, well, maybe I need something like gold, but is this better than gold? And that's kind of what they, Paul Tudor Jones, Stanley Druckenmiller, Bill Miller, you have 1,000 companies, 1,000 big investors that all discovered digital gold. Companies like mine, when we did our search, we found that there was no public company with any material amount of Bitcoin.
Wow.
We were the first, but then we were followed by Square, we were followed by Marathon Digital, we were followed by Tesla, you know, and so on and so forth. And so it's still early days. I would say that year 0 was from March to February 8th when Tesla announced. We're now year 1 of legitimate institutional adoption. And we should see the next 36 months should be kind of very fast. I think that the right way to think about this is that money has 2 components. There's a currency component, which is a medium of exchange and a payment network. And then there's an asset component, which is a long-term store of value. And it used to people used the dollar as a medium of exchange, and they used debt and ETFs and index funds as store of value. And maybe some people use gold. I think that if you look out, you're going to see the final culmination of the mobile wave is 8 billion people on the planet with a mobile wallet, and one layer is US dollar or euros in your checking account or your payment network, and it moves at the speed of light on compliant payment rails. And then the second layer is your savings account, and that's like a high quality asset. So what are the high quality currencies? US dollar, euro, yen, yuan. What are the high quality assets? Bitcoin, and then fill in your blank, an ETF, your Amazon, Apple. Who are the losers? Low quality assets, probably gold is a loser. Some of the, crappy stocks are a loser. Bonds that are negative yielding, savings accounts that give you negative interest. Those are losing assets. And the losing currencies, Venezuelan currency, Nigerian currency, Argentine currency, Lebanese currency. The weak currency is getting squeezed out. Weak assets getting squeezed out. The world will stampede toward strong assets, strong currency. I think the US dollar is a winner. I don't think it's a loser. I think that this spreads American supremacy to you should expect 5 billion mobile wallets with the US dollar on it. And now how do you get the mobile wallets to synchronize in cyberspace? You need the Bitcoin blockchain, because that's the settlement network that lets a mobile app in Africa settle with a mobile app in the US and a mobile app in China once a day on the blockchain. And then you got 18 million applications or 18 million transactions an hour running on the second layer with the currency. Bitcoin's the most secure database, secure network in the world. And in the first 1, 2, 3, 4 years, you couldn't be sure, but after 12 years, it has not been hacked. The risk, the cybersecurity risk, is at the layer 2 level with Bitcoin banks.
Yep.
Square is a Bitcoin bank. Coinbase is a Bitcoin bank. Mt. Gox was a Bitcoin bank. So there'll be 100,000 of these mobile apps and websites sitting on top of the underlying Bitcoin. They all have their own attack surfaces, and they range from simple password on a web browser down to like triple factor authentication hardware wallets. And you'll see all of those things. I think if you're a user of Bitcoin, you have to just very carefully decide what kind of Bitcoin bank do you want to deal with. And look, you could buy Grayscale Trust, GBTC, and you own some Bitcoin exposure, and you don't really have the hacking concern. Right. Or you can go the opposite extreme and you can memorize a 24-phrase seed key in your head. Sometimes, you're a bigger risk to yourself than the bank is.
Definitely.
Yes,
I think you might find that people will fall in love with the idea that, like, Apple gives you multi-signature with the iPhone, the Apple Watch, the biometric secure element in the cloud, and they might get comfortable with something like that, It remains to be seen who's going to win the war. What you've got is Fidelity competing with Coinbase, competing with Square, competing with Trezor, competing with Ledger, competing with memorize the stuff in your head.
And finance,
And that's the market, and that's all fair, and it's fine. Yeah. And the market will decide. And by the way, it's not even that there's one right answer, because if you're Mass Mutual and you want to buy $1 billion of Bitcoin, you're not putting it on a Trezor or whatever.
No.
You don't have the ability. So everybody, there are flavors of money, and everybody's going to take a different approach to put their money into this asset space.